The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. The last show of the year, 2020, has been nothing to fear. Boy, oh boy, has it been some kind of year. I'm a poet and don't know it. I makes it rhyme every time. Starting with the Tesla, the stock of the hour. I think Bitcoin wins it, though, being up 302% this year. But I think you're looking at this, Tesla's done a lot better than that, it looks like. Yeah, sure has. You'll notice that we do have a 3 drive to a top forming there at 754. We also have a big ABCD. It's absolutely perfect coming in at the same time. So just a minute here. Hold on 1 second here, and I get these things turning off here. But that's what you're looking at here in the Tesla. News is always bullish on Tesla. Even when it's bearish, it's bullish. So we'll see how this acts during the time. Okay, now one of the things that we needed to talk about today is the Apple. We've been watching Apple. We did a trade in Apple. We sold it up there a couple bucks higher than where it is right now. I'll get the chart up, and you'll see that we've had it's down at about 3 points in the favor now. It's almost hit the 382 there at 133. We got down there, came very, very close to it. So if you're in that, put your stop at break even. And then I'm going to do my last trade that I'm going to post here into TFNN for the year and also for next year and all next year after. Those are all going to be done through the 24/7 service that we have here at TFNN. But here's one that is really interesting, folks. It might not work, but by golly, it's got all the things necessary that you'd like to see, and we'll just get this up here to take a look at it. It happens to be one of my favorite things. This is soybean oil. You notice here that we're making a nice run up here. We're almost at 42. We hit the level of 42.20, and you only have to risk about 60 points in that. Folks, this is the kind of trade that I was in all during 1975, half of 75 and half of 76, getting out of it in June of 76. It was a move just like this. The news was so bullish coming off of Reuters. We didn't have the fancy communications that we have now, but the Reuters, you'd read the paper and it would say there, the only soybeans that you're going to be able to find in the coming year will be in the Smithsonian. That's how bullish the supply-demand situation was. And that was the top day right there when that thing came out. I wish I'd saved that paper. I didn't. But that's what happened. It was very, very bullish. The stocks, the beans and oil and meal opened just slightly higher after being called 3 to 5 limits up earlier in the day. And they went down the limit for 5 days and then went down well over a year and a half, making another bottom in early 1977. So this pattern has a double ABCD pattern. It has a perfect 382 retracement at the beginning of December. As you can see right there, we talked about that in the commodity part of the newsletter, of course, and we had a nice little run up here making the 1.618 expansion. So it's got double ABCD, double 1.618 expansions. You can't ask for anything more than that. And the reason why, folks, is because this is what your risk is. If you're risking, just that amount, I mean, you stop and think. Soybean oil is trading at 42.20, and if you just took 3% of that, which is a very, very small amount, you're going to have to risk about 120, 65. You have to risk about 40 pips. I'm risking double that because it's such a big pattern. Which is only $300, by the way. You're only risking $300. The probability of it winning is better than 7 out of 10, and the risk versus the reward is 3 to 1. That you can't ask for anything better than that. If you turn that thing upside down, you have to buy it. So if you turn it right side up, you have to sell it. I mean, that's just a pattern with double ratios. I mean, that's what the game of pattern recognition is all about, folks. You can't ask for anything more than that. That's for sure. At least I don't think you can. All right, now let's take a look. We have Shane Smolian as our guest at the half hour, and we want to take a look now at one of the grains that we've been, since we were talking about soybean oil. We'll go over to the wheat market. You'll see here in wheat we had a beautiful Gartley form here that took actually a whole month to form. Perfect ABCD right down there at 566, and it rallies 80 cents and makes a double top. Well, we've made that little double top in here so far today, but that definitely was a completed pattern. Many of these grains got a lot of work to do this weekend on all these charts, because many of these grains are starting to see, signs of some type of accumulation is not accumulating. They're getting rid of it. So they could be topping up in this area. We're seeing the same thing in the S&P 500, folks. I mean, with this big move we've had, the open interest has hardly increased. It's only increased like 50,000 contracts out of 2.5 million. And that is very, very small considering the run that we've had here, especially over the last several weeks. I mean, you'd think the open interest would be going wacko. And in fact, it is not. So some people are, taking some protection during this time. Now, yesterday, one of the things we talked about was the 382 pattern in the Russell 2000. That's the small cap. You'll notice here that it hit the 382 retracements, backed off, and then went right back to the third one, and then had the significant sell-off there. As long as we don't get above 2,000, this market, I believe, is still heading lower. But right now, it's still a little early to tell. And believe me, folks, it's not a business of trying to pick a top. It's trying to pick a pattern or two that you're going to be able to see, and then also be able to put the order in and take a profit on it, because you got to be able to be executable profit, just like we're doing in the soybean oil. You've got to get a fill in there, so you've got to put a price in where you want to be filled, just like with the apple. I mean, you got to find a spot there that says, okay, if I sell here, my odds of winning are better than 2 out of 3, and my win reward ratio will be 3 to 1 or better, and that's what you're looking to try to do. That's the main thing of what you want to be doing here. So let's keep a very, very close eye on that, and we will certainly try to keep that stuff going best we can as we go here through the rest of the day. Here, let's get up here. We got another one that we want to see.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hi folks, this is Tom O'Brien. Do you have broken or unwanted jewelry, diamonds, watches, coins, silverware, and other collectibles that you would like to turn into cash? Tiger Precious Metals and Stones will pay fair market value. We make it easy to turn your precious metals that are sitting around in your house into cash. Call Andy now at 727-329-8245 and he will walk you through our safe and secure process. Andy has been in the business buying and selling precious metals for over 15 years. Call Andy now at 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, we're going to take a look at copper, short-term, long-term, any term. You'll notice here on the weekly chart, the blue line that you see there overlaying the copper is the S&P 500 cash, the SPY. You see there's a very high correlation, although not perfect. It's better than 80%. And if that's the case, you know, we could be looking at a high in copper up at that 1.618 level that we hit at 364, which we hit twice, as a matter of fact. If we go and look at copper on a little bit different time frame, let me get this up here so we'll be able to see it here. 1 second. This is the monthly chart. You're going to be also able to see here, you'll see that 1.618 that we have on the monthly, and you'll also see that happens to also be a 61% retracement of the high from 2011. That's when all the metals topped. That was August of 2011. We had silver back near $50. It was $50, and we had gold at 1932. And so that's just a few of the ones that we're looking. Now, what we want to watch now is to see how copper is going to react in the short term. And if you'll remember here on the den, we saw that top up there. We were looking for the Gartley to come back. And, of course, you see we made the 61% retracement up there at 360. Now the low that we made today on New Year's Eve is exactly 78% of the low that we made down there on the 22nd of December. Now, this means if we break that low, which is 348, that sets up a large A, B, C, D pattern that's going to take us all the way down to about 340. And that is where the pedal will meet the metal, and we'll see whether that ABCD is going to bring any demand in. But right now it has tremendous support there at that level that we're watching this morning at that 348 and change. So it's important that we get below that. The Bob is saying about the British pound. You're right, Bob. The British pound is a sale up there at that 137 level. He's saying 136.90. I've said that from quite. Let's just see if I got that in the file here that we can take a quick look at it and determine whether we're right on the money here or not. And let's get up here. I think we're getting close. Yep, here we are. We'll get up here. You'll see that the number we were looking at is 137. We should be pretty close to that right about now from what Bob is telling us, so we'll see if that's the case. You got to risk about 100 points in that, folks, which is $600, but it has a lot of profit potential. And remember, this is the day. At 11 o'clock last night in London, they actually became independent again. They're out of the European Union. And by the way, Happy New Year to everybody in Australia and New Zealand, because you've already seen New Year's over there. So Happy New Year to you. Happy New Year to everybody everywhere. Hope we'll have a good year and make the world be a little bit better place, and we won't have any more virus, and we can travel and see our grandkids. It's been 1 year today that we have not seen our grandkids live. We see them all the time on Zoom, but that's not the same, boy. We missed lots of kisses and hugs over the year, and that is the real loss. That's been the real sadness to see that, not being able to hug them and give them a lot of love. Anyway, we'll get these things moving here in just a second. There's a few other ones that I need to talk about. I've covered the Apple. I have covered the Russell. I've covered the Bitcoin. Folks, Bitcoin is just a shy from 30,000. And remember, the 1.618 on the Bitcoin comes in at 34,000, so another 4,000 points up. You'll be at a 1.618 expansion, and that means you'll get ready to go. But this market is really starting to move. It's getting more and more people are interested in it, and one of the things that you can tell by that is that if you watch CNBC, you'll notice on the right-hand corner where they show the Dow Jones and the gold and the crude oil, Bitcoin is now listed in there. I mean, that is a big deal. That means people are starting they don't understand it because it's not an easy thing to understand, and I certainly don't understand it either, but they're getting ready to make this thing move. And if it can go from 3,000 to 28,000, it can easily go to 55,000. And that John Jameson's target for that for 2024, I believe, is at 55,000. But the way it's moving, it could get there a lot faster. But boy, it's not an easy thing to understand because it's not a stock. It is a coin. And then you have these other companies that are involved with blockchain stuff, and they don't have, cryptocurrency. So what they have to do, they don't have their own blockchain. So what they have to do is they call it a token. So Bitcoin is actually a coin, as Ethereum is a coin, and Ripple is a coin, and Cardano is a coin, but other ones are only tokens. They use somebody else's platform. They're not traded through regular exchanges usually, even though they have some of them. They have an ETF for it, I'm sure, and then they have the futures, the Bitcoin futures at the CME, but the open interest is only about 4,000, and that's after 2 years, so not much interest there. But the fact that it's starting to move is telling you that, yes, more and more people are beginning to look at this more and more. Now, the end of the year here for the dollar index is going to be very interesting here because for some reason there's a tendency within the month of January to see some major movements. And I've got a whole lot of things to cover in the newsletter this weekend because we need to cover the Australian dollar, the Canadian dollar, the British pound, the Japanese yen, the Swiss franc, and the euro, and add those up all together to get the dollar index, because the dollar index is 53% of that, but you got to put the other ones in to get to about 75%. But I don't do the strange ones, like the Zimbabwe's and, the Mexico, the Brazilian peso and stuff like that. I don't do those. So I just focus on the big six, for trading purposes. And that's what it's all about. It's not about predicting. It's about determining where you can enter a market with a small amount of risk to see if it's going to give you a profit. That's really all you want to, really what you're looking for when you're watching this right here. Now, I'm very, the word would be hopeful for what the year of 2021 is going to bring because of our volatility in stocks. You notice it used to be the volatility index was always trading around 10, all during 18 and 19. And then all of a sudden, here we are coming into 21, and the average price is probably around 25. So that's telling you the boys and girls are getting ready to have some serious volatility here for this coming year. And you can see it in the price of the options. The price of the options, both calls and puts, has gone ballistic. I mean, they're factoring in, a lot of protection when they're putting this stuff on. That's why you need to follow these standard deviations to tell you when the market is getting ready to change trend. Because if you see a three standard deviation move in the S&P 500, which would take you down about 11%, that tells you that the trend has changed. So if you see 11% drop in the S&P, which would be substantial, you're talking 350, 500 points, there would be the chance that the trend might be changing. But our job is to determine when that happens as quickly as we can so we don't have to risk very much. That's the main thing to look at. Now, we got a break coming up here shortly. We will have Shane Smolian on for the last time of the year. He's given us some great stuff through the year, and I'm sure he's got some nice things to look at. So we'll be right back. 877-926.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have the wolftrader.com on the line. The Shane Man, how are you, my friend? Happy New Year to you.
Happy New Year, Larry. How's everybody today?
Living the dream, baby. Staying on the green side of the grass as always.
That's the way to be.
You got
All right,
it.
everybody. Well, welcome to New Year's Eve here, and we're turning the page here to 2021, and hopefully it's a better year for everybody. 2020 has just been a definite roller coaster ride. So, and that has been marked by these incredible astrological events that have been going on too. So this is some type of a significant turning point, I think, for the planet, for humanity as a whole too. So I'm going to start out here with the Fear and Greed Index. And this is interesting because it has pulled back. It was at these really extreme levels. It was pushed all the way up to the high 80s, but now it's pulled back. So it's really in a neutral place right now. So there's no real decision on that one way or another, just because it was, like I said, it was pushing up very, very high, but now it's pulled back. So you could interpret that in some ways. The fact that it pulled back is bullish. You could interpret that. Just to show you a comparison graph here, this is the Fear and Greed over time, and you can see it did push up here, well up to close to 90. It actually almost came up to close to that pre-COVID peak over here. So it did run up quite a bit. So another argument you could say is that we did go up and we've hit a top on it. So it's not really clear right now because we're in the holiday season and the markets are going sideways, but just something to point out there. Now the CNBC, I want to point this out too, the CNBC summary, the 2020. This is how CNBC summarized the year, and I'm going to summarize it a little bit different. But they said the spread of COVID-19 crushed the stock market when it became clear that it would cause a rapid and historic drop in economic output. I think that's accurate. As the economy bounced back, the recovery was choppy. Millions remain unemployed, yet stock market has surged. Yes, the market's rapid gains are based on optimism, vaccines that will help return a world to normal to the new year, and businesses will do well as a result. This part I don't agree with necessarily. And it says, but strategists say market valuations have become distorted and will likely pull back. So they didn't mention the key points in there, which I want to talk about, which is, this is my recap. So I'll kind of tell you how I saw this. The COVID-19 crushed the market, true. The Fed began a nuclear quantitative easing program like we've never seen before. They expanded the emergency lending. When I saw this on March 20th, I sent out a tweet at the lows, and I said, I expect a full recovery. Larry, I think you remember this. I came on the show and said this, but I said I expect a full recovery based on the Fed in the United States. Then Congress passed 2 record stimulus bills. They didn't mention that. So this combination of the Fed and stimulus caused an inflationary surge with the simultaneous destruction of the U.S. dollar. And so for those of you who don't know me, again, I'm Shane Smolian from Wolf Trader Futures. This was the tweet that I put out. I put this out at the actual market low. And again, I'm just re-summarizing the year here. But I did believe, as we were crashing, when I knew the Fed was going to come in, that we would get out. And I also have faith in the United States. I knew that we have the best minds and scientists working on this. So I saw it a little bit differently than CNBC did. They didn't mention the Fed. They didn't mention the stimulus. Those were the 2 big driving factors here of this market. And then you could throw in there, a lot of these speculative traders, the Robinhood traders, these types of momentum traders too. But the main focus there was the Fed. Now, let me talk about 2021. This is interesting. The inflationary effects of the stimulus and the Fed, they will continue to have these inflationary effects on most commodities. And we're seeing this across the board. We're seeing it in copper. We're starting to see it in gold and silver modestly. We're seeing it in corn. We're seeing it in oil. We're seeing it in most of these currencies that go inverse of the dollar. So we're seeing it in Bitcoin. So the inflation is definitely palpable. These stimulus programs are humongous, trillion dollars at a time. So that's interesting. That's going to continue to try to push this inflationary effect up. Astrologically, the Saturn Uranus squares are coming in February and June. So that's a big negative, Larry. This combination is one of the most bearish combinations that you can have in the stock market for a single transit. So think back to 2008. We had Saturn opposite of Uranus. This was a Saturn-Uranus transit when we had this panic in the 2008 market. So you have these 2 battling forces. I would say the astrological climate is negative with the Saturn-Uranus square. And that's also civil unrest. And also Saturn is in the sign of Aquarius, which is also Saturn-Uranus. So you have a double aspect of this coming up. So to me, that's bearish for the market. But the Fed will be battling this. And I really, really like the fact that Yellen is the Treasury pick, because these two, Yellen and Powell, they're best buddies, you know. So I think that's a very good combination for the Fed. So it'll be an interesting battle coming up in 2021. Now, I do want to tell everybody that today, many of the Fed's emergency facilities are ending. They put this in the last stimulus bill, and I want to point this out, and this could be very bullish for the U.S. dollar. And so I don't agree with this. Some senators put this in, saying we have to end the Fed's emergency lending powers. I don't agree with that. I think they should have left them open. But we'll see how that plays out. That could be a very, very important factor right now, pointing to a possible market high. So that's something that it doesn't show up in the current Fed juice, but it's something that it's part of the juice that's going to get shut off, essentially. So we got to watch that with interest. I feel that is not good for the market. And they needed to keep those facilities open. And the way that I understand it, they have to go back through Congress to open them back up. So while that could happen, in a matter of weeks, if we have another crisis, it's still a lot of damage can happen in a few weeks. And so I don't agree with that. So that's a big red mark to put out there, guys, that I know nobody's talking about, but I watch the Fed, and that's important. So that's what I have to say about that. Do we have time here to go to another slide?
Yeah, but can I ask a question first?
Sure.
I thought the Fed was pretty independent of anybody, and they can do damn near whatever they want. I mean, why do they have to go to Congress for that?
Well, in some ways they can, but the way that they shape the last. So there's the regular powers that they have, and then there are these emergency facilities, these lending facilities, these corporate credit facilities. So what they did in the last stimulus bill is one of the obstacles was they wanted to have a sunset clause on these facilities that they will end. And so this is new, broader facilities that popped up, like the TALF, like the corporate credit facilities, all these things that popped up, and they tend to shut down after crises. And this happened in 2008. So that's normal that they do shut down, but I don't think we're out of this by any means. I think that what we're seeing in these markets is largely the stimulus from the Fed, and we haven't seen the economic recovery just yet. So that's why I think that they need to be there and available. And I'm going to show you a few slides here just to demonstrate this. So this is a summary here of 2020. This is what a crazy year. This over here, this is when the COVID crisis started, and then I have here this, and this is white. This is the S&P here in white, and this blue-green line here. This is the Fed juice, the raw Fed juice that I measure through operations of the Fed, and we will talk about that after the break.
Be right back with the Wolf Trader himself.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the fund is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Hi folks, this is Tom O'Brien. Are you looking to buy or sell gold, silver, platinum, coins, or bullion? We can help. At Tiger Precious Metals and Stones, we specialize in the buying and selling of gold, silver, as well as collectible U.S. and foreign coins. We not only buy your unwanted or broken jewelry, but you can trade that in for gold and silver coins too. Call Andy now at 727-329-8245 for a quote over the phone and to lock in the current market price. Call us now at 727-329-8245.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. We're talking with Shane Smolian, wolftrader.com. Would you continue, please?
Thank you. So, by the way, if anybody does want to reach me, the website used to be wolftrader.net. It's wolftraderfutures.com. So just to clarify that, because I know some people went to the old web address. All right, so getting back to this chart. So this really encapsulates 2020. You can see here, this is the S&P in white. This is the Fed, the blue and green graph here. These are multiple time frames. This is the COVID drop. Now, you can see here this huge nuclear burst from the Fed. And this was the tweet here on March 20th when I said that I expect the full recovery, because I was seeing what the Fed was doing. I was watching it. And this is, by the way, this Fed graph has nothing to do with the market. It's not an acceleration function or nothing like that. This is an independent data from the Fed. You can see this huge burst from the Fed, and then they started pulling back. And maybe they thought it was too much, too fast. I don't know. But the point is, even after that, when it started declining, it was declining all the way into about October, like right before the election. They declined it from May to before the election. You can see here that every move in the Fed down here goes with the move in the market. So the first one here on the yellow line here to the letter A on the bottom, you can see it matches the market. You can see when the Fed pulls back here at B, the market follows. You can see when the Fed goes up here in C, the market follows. When the Fed pulls back here on D, the market follows. Market starts to shoot up here in E. The Fed starts to shoot up in E, the market follows. Then there was this one here, this interesting dip here. This was because of a one-day shutdown because of a holiday. Market follows. Fed juice goes to zero. And then all the way up here from F to G, you can see that follows too. So there's really no exceptions to this. So the Fed really does control the flow of these markets. And then down to H, and then, of course, we're up here in the letter I right now. But my concern really is, like I said, these emergency facilities that are going to get shut off. So, if this Fed juice starts to tank and go down, it's Katie bar the door for the S&P. I mean, this is the lifeblood of the S&P. As far as everything that I've researched since 2009, this is what's driving it. So this is just very important to watch this, and I want to see what happens next week when they start shutting these facilities down. On a weekly time frame, the Fed juice appears to be okay. It's still very bullish on this weekly time frame, but again, I want to see what happens with these facilities. I'm very concerned about that. So right now, the Fed juice is in a buy, the dollar juice is in a buy. The transits are heading lower. But my concern is that some of these programs are ending, and our fast Fed right now is in a sell. So I think there's a case to be made here that there could be some type of some type of a top coming in here, based on what I'm seeing with the Fed. And again, that's a forward-looking thing because we don't know what effects this is going to have yet. But I definitely want to look and see on that. So these are the transits right now. Today we're coming into some type of a low, between the December 30th to December 31st. We're coming into some kind of a low here. And next month is more bearish on the transits, and we have some lows coming in around mid-month. So it's possible here that we could be looking at some type of a high here on the market. This is a chart here of the U.S. dollar. It's making a buy today on the dollar juice. I do want to point out that it is at an extreme RSI value. When it's in these downtrends, the dollar tends to reverse at very low levels. So you can see here it reversed once here at 6.7, 12, and now it's at 22. But if you take a look down here at the actual RSI, you can see that this is building a positive divergence on the RSI. This is a 5-period RSI. So again, if this dollar starts to strengthen due to the Fed, then that could have a negative effect. Yes.
Shane, we have a caller calling in. Jeff is calling in about a question. You want to go ahead, Jeff? Sure. Thanks for waiting, Jeff. Go ahead.
Yeah, sure. And sorry to interrupt. I was going to wait till Shane was done his presentation. But let me just wish Happy New Year's to everybody, and thank you, Shane, for taking questions from the peanut gallery here. My question is, as far as I can tell, we just had 3 dates in December where we should have seen an effect on markets. There was one December 14th, December 21st, and we just had a full moon. And I really haven't seen effects from any of those 3. And my question is, when you don't see effects from what should have had effects from astro events, is there a message in that? In other words, like, is this getting saved up and we're going to get a big whammy, or like once those events have passed and you haven't seen an effect, well, that's just, done and there is no message.
Thanks for the question, Jeff. That's an excellent question. And so let's talk about that. So a lot of forecasters just look at the astro only. I don't do that because I understand that it's a combination of the astro and what the Fed is doing. Okay. So, and then also what I would put in there for this week is you're in a period of holiday seasonals, okay, where you have very light volume on these markets. And so typically, a lot of times during these couple of weeks, the market does not trade with its normal character or behavior. It trades on light volume. And sometimes we just see this very low drift in here. I think that you will see something more dramatic after we get past the new year, we get into next month. Now, the actual seasonal pattern, which I don't have here on the S&P, it's actually making a high on the 1st, which is tomorrow, and that will head down for about a week. So I think there's a chance here that combined with the Fed that this could turn down. So and also the Fed, ironically, when the volume is weak, the Fed has a stronger effect because there's less players. So hopefully that answers your question. But this is not a good week to actually gauge just because we're in this holiday this pattern here.
Okay, I understand. And so it sounds like what you're saying is once an astro event has passed, like maybe a day or two, and you haven't seen an event, don't expect to see any effects from it. It's been in the past. It's just that these 3 in a row happen to be in this period of time where they're not going to be as effective.
Okay, so let me answer that question. That's a good question. It depends on the strength of the astro event. Things like the full moon and very small events like this, they have a very small window of a plus or minus a day or two. But when you're looking at something like, I have a graph up here like the transits, right? So you can see from 1223 to 1230 here, it's generally negative. So something like this, that pattern would continue even after the peak on 1223. So if this is why I look at the combined transits versus just one. I don't like to look at just one aspect a lot of times because it comes and it goes. And that can be useful if they cluster, like you're talking about a cluster this week. Now, there's also slower moving transits like the Saturn Uranus squares, which are coming. And so those, because they're so slow moving, you will feel those effects like weeks on either side of it. So that Saturn Uranus square coming in February, you could start to feel that a couple weeks on either side of it. So hopefully that answers that question.
I see. How about the event that was on the 21st? There were several things that all coincided. There was a Jupiter-Saturn alignment of some kind. I'm not an expert in the astro stuff, but I remember hearing from you and other people that on the 21st, that was supposed to be a really significant event.
Yeah, we'll talk about that after the break.
Great, thanks.
We'll be right back, folks.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back with Jeff and Shane. You want to continue, gentlemen?
Sure. So the Saturn-Jupiter conjunction happened on the 21st, and I would argue that it did have an effect on the market. We saw the S&P have a big drop, and it happened intraday. We happened to be actually had a fast Fed signal on this, which is a signal that I track. I'm going to show you a chart here. This is a new signal that I'm tracking, the fast Fed. And this was the intraday chart on the 21st. We were actually short on this. It went one tick from the target. It was over 100-point target on that. One tick and it reversed, and then we actually trailed it down. This is a parabolic stop and reverse. actually trailed that down because it came within one tick, and we covered on that. But the problem, Jeff, is that these shorts are so difficult with the Fed. The Fed is so powerful on these markets that these opportunities come and go so quickly on the short side that it's virtually impossible many times to time these. You have to be intraday, and I typically don't like to do that. Most of these signals are, longer term type stuff, like end of day. The fast Fed trades that we have last 2 to 3 or 4 or 5 days. This is a clue here. I have gold here. Gold is just a clue. This is going the Fed juice. I'm projecting this to go into a sell today, and I think that's based upon largely to what's going on with the dollar. And then we have a lot of these runaway markets that are at extreme levels, like Bitcoin here. Even for an uptrend, it's at 98%. And remember back when gold turned, it was turning around 95 or 96% in the uptrends back in the summer. So, a lot of these markets I think are getting to be just extremely overheated, and so you could make the argument here that dollar is that could be strengthening, and if the Fed does pull back, you could make an argument here that there's some type of a top forming.
That makes good sense to me.
Excellent answer. Thank you so much for taking the question and giving me such a complete answer.
Happy New Year, everyone. We'll see you next year.
Thank you.
Happy New Year.
Thank you.